Hi guys, Piotr here. This is LiteFinance Global YouTube channel, and we are going to have another meeting. This time what we are going to discuss is going to be the study of the basic of support and resistance levels, and trying to figure it out whether the strategy related to the support and resistance is close, or if we might getting closer to trying to find our holy grail. Alright, so each and every trader after a couple of months of trading got the big chance to recognize some certain levels which we might call profitable trading levels. Well, very often that could be round numbers, like the full figure or half of the figure. So let's say 122, 122.50, 123. Of course, the big numbers like 120, 130, 100, 110 also might work well. I really like to take the advantage when it comes to the higher time frame, and trying to, based on the higher time frame support resistance levels, trying to trade on a smaller time frame from the day trading perspective. Okay, well, the horizontal levels, horizontal lines, well, in my view, are the best. That's what I'm using very often. But I'm going to show you the twist today. All right. Of course, we have to understand that these levels we are going to discuss, they don't guarantee 100% success rate. Right? What we have to understand is how the price is formed, right? So before we are going to continue, again, I will try to ensure that you at least understand the basic, so why the price is going up or why the price is going down at all. Well, the thing is all about supply and demand, and some time ago, and it's also available on the blog, I did some webinars related to the supply and demand levels, and that's what I'm usually using over the course of the day, right? So well, let's talk about the oranges, right? Well, if we do have, let me make it, if we do have, for example, three sellers on the market, right, for $30 per kilo, $40 per kilo, and $50 per kilo, right? And well, if you are going to ask almost everyone going to the market trying to buy oranges, right? They are going to try to buy what? They are going to try to buy the cheapest one, right? They are going to try to buy those $30 per kilo, right? But what if at some point at the market we don't have any more, right? There was a big buyer, and well, he's going to have a big party, and he bought everything from the one seller. So then the other buyers, if they are visiting the place where the oranges are being sold, they are going to pay higher price if there is no more or no fresh supply, so they are going to pay 40, etc., 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 right? So that's the pure law of supply and demand. That's how the things works when we are visiting shops, when we are visiting places where we might be able to buy fruits, vegetables, and stuff like this, right? Now, when it comes to the market, well, it's a little bit different story because at certain levels, all right, at certain levels we might have a limited supply, limited demand, right? So, for example, we might have 2 billion euro at 110, right? Then we might have another 2 at 1.1050, okay, and another 2 billion around 111, right? And if there is a fund looking to buy, for example, 5 billion, he has few options, right? Either he is buying at market, whatever the available price is. So if he's about to buy 5 billion, he's going to buy 2 at 110, 2 1050, and the last one he needs at 111, right? So the average price is going to be above 110. That's one of the options, all right? There is another option that, for example, we are buying just with the limit order, the 5 billion at 110, right? So we are going to take out the supply from 110, and we are going to place our demand, right, for 3 billion at 110, right? So we are creating the demand at the certain level, and we are waiting for our order to be filled. So there are plenty of options, and especially around the London fix, afternoon London fix, very often we might hear many different rumors that there are big funds, big institutions looking to buy at the London fix, and very often we have the move towards the one side, and then we are going get back right after the fix, for example, right? So that's something, because we are going to discuss the basic, that's something you may want to try to look around something. Those examples are available to read, right? So basically we do understand it's all about supply and demand at certain levels. Well, I'm going to show you first, as I mentioned, that we are going to talk about some twist. So what I like to see when the certain demand level or support level is being formed, I like the market trying to take out the stops very quickly, going back above with the retest. That's my twist. That's my twist. Why? Because, guys, I'm going to show you in a second how you can sometimes try to expect the price action based on the supply and demand, right? So this type of the price action is what I'm looking for. Okay, I might miss few trading opportunities here, but this one proved me that my chances to being right are getting bigger and bigger. All right, and the same situation when it comes to the supply, right? Very similar. I'm not trying to trade each touch. That's what usually you are going to find in many different books, but I like stop hunt with quick move back, retest, and that's my entry eventually, right? Now, as I mentioned, I'm going to show you important thing, because each time the market is hitting, for example, support, right? It's getting weaker and weaker. We are feeling the orders, and unless someone is going to put more into that level, right, we might see attempt to break lower and continue to the downside. So when you see that the bounces out of the support are lower, each is lower, right, and you can create, for example, trend line. It could be you can use the fib to measure, right? It could be for you warning sign, right? Very similar when we are talking about the supply, when the rejections are getting weaker. So market is feeling those sell orders, but market is strong enough, the pullbacks are not that big, break to the upside, retest, continuation to the upside, right? So let's have a look a few examples. For example, dollar yen on the daily chart, we've been creating the support around 108.40, right? Then break to the downside with the quick move back above, retest, and attempt to continue higher. Very similar situation when it comes to the cable. All right. What I like, for example, here on the downside, there is a green horizontal line. Usually I'm using the green color to detect what is going on the daily chart, and as I mentioned, going lower, trying to figure it out, the lower shadows with the move back and close above. That's what I like. Then going even lower and trying to take the advantage. Very similar situation when it comes to the supply. All right, with the stop count. All right, so that's my twist. That's where I'm. For me, less means more very often. Being patient on the market is what you are looking for, right? So I haven't been trading each of that shadow, right? But once I saw stop count, also I didn't chase the market down. I've been waiting for the retest. I've been waiting for retest to take the advantage on the smaller time frame. So hopefully, guys, hopefully the twist is gonna be useful for you. So that was the basic stuff in relation to the support and resistance, about the horizontal lines, what I like to see when I'm trying to attempt to make the trade. With that being said, wish you good luck, guys. Do your own homework, work with this, check and try to adopt what is suitable for yourself. Good luck, guys. Take care. Goodbye. See you around.